experience so far. And please, guys, I want to implore us, because I realize some of us are blowing accounts already. It doesn't have to be so. Like I always tell you guys, this market is oversaturated. Don't let us contribute the little our hard-earned money. Don't let us contribute more into this market. If you know you have not gotten the right knowledge, as in all the knowledge, everything you need to attack this market, why don't you just take your time? It's only 2 weeks training. It's only 2 weeks, and we've done a week already. Why don't you just take your time? Let the training come to an end. There was a time when in my coming up days in Forex, I traded the demo account for complete 3 months. Complete 3 months. I traded the demo account. So if you have to put your real account aside and focus on demo for the next 6 months for you to get this thing, guys, it is not too much. I don't know why the hurry to enter this market. I don't know why they hurry to enter this market. As in, I traded the market with demo for complete 3 months. Then I have this channel, I have this software channel. It's only the people that were close to me that knew that I was trading with demo. So this market, don't be in a hurry to make this money. When you have this knowledge, even if your village people follow you to Lagos or to wherever you are, they can't stop you from making money in Forex. That's when you have adequate knowledge. If you want to be sure you know what you are doing, go to your demo. The 10,000 US dollars, reduce it to 50 US dollars or 100 US dollars. Take the 100 US dollars with normal lot size, not with arm rubber lot size, with the adequate lot size. Take it to $200. Then you know that you've achieved a level of consistency. You don't test the real market with real money, guys. I don't know why we are so much in a hurry. Because in a bit of making more money, you realize you lose more. And by the time you lose, then to now get another money will be very difficult. This is Africa, guys. Thank God, majority, almost everybody on this boot camp, they are Africans. It is hard to get money in Africa. Even if you are working, to get money is hard. I was working. I worked for several companies before I eventually resigned to do Forex full time. Even while I was working, I take loan to parents, I take loan to do this, I take loan to do almost everything. So I know how it is getting money. Then for you to now, save the money up and still approach this market carelessly and donate to these guys that already have more than enough. Please get this knowledge. Get this knowledge first. And when you get this knowledge, and if you look at the post I made in the decision whether you want to buy or you want to sell, you don't just see a candle going up, then you click buy. You don't see another one coming down, you click sell. No, at least have 3 strong reasons why you are buying. When you take a decision without knowing why you take that decision, guys, you are gambling. You are not trading. And that's what most people do. Most people in Forex are gambling. They are not trading. They are gambling. Before you click on sell, that if you've followed me very well, you see, even after making immediately, why? I'm waiting for my confirmation checklist to be met. I'm waiting for my confirmation checklist to be met. When my conditions are not fully met, I don't call the trade. Sometimes you see me call a sales, drop a sell setup, and at the end of the day, you don't see me eventually call that sell. That means my conditions were not met, and I don't need to get into the trade without my conditions being met. If I lose the trade eventually, there is another trade that I will still see before the end of the day. So before you take a trade, ask yourself, you don't even need to send me a message. Ask yourself, what are the reasons behind you making decision on this buy, on this sell? What are your reasons? Like the guy that brought me up, like, in fact, when you see him taking a trade, he's so meticulous, he's so conservative, his confirmation checklist is up to 7. And if it's not met, so many times you see him letting a trade go. And I'll be like, me, I won't let it go. When I was coming up, I chased trade a lot. Now, letting it go, no. Now 7 confirmation checklist for waiting. What happened? But I realized as a result of the experience he has had so far, that's what necessitates him doing that, because he trades full time. By the time I met him through our ML group. He was trading full time. He's a naked artist and all. As a result of his experience so far, because when you see experienced trader telling you don't do this, as a newbie, you think probably they don't want me to make this money in time. They don't want me to also make money like the way they are doing. But like I used to tell people, if you refuse to learn by instruction, you are going to learn the hard way. Because by the time you lose that money, then you now come back to yourself, let me now follow this instruction that I feel is too slow for me. And most people have given the trading plan I also gave to you. That's the same way they approach the trading plan. They'll feel 30% on a daily basis. It's too slow. It's too slow. When am I going to order for that Benz? But by the time they blow that money, they'll now come back to the trading plan that they don't want to use. So if I'm telling you, take your time to get the knowledge, reduce the $10,000 to $100. Now take the $100 on your demo to 200 to 300. When you now do that consistently, then you know that, okay, it seems you are getting something from this market. I have blown accounts in the past. Just because I blew accounts in the past doesn't mean you too should blow accounts. Only if you would follow instruction, that is when you won't blow your account. But if you refuse to follow instruction, I am telling you from experience that, see, this is the way to do it. But if you decide not to do it that way, that means you have to learn the hard way, just the way I learned it the hard way, that, see, if instructions are not followed, the account will get blown severally. I shared a story with you. The last account I blew, it was on a Sunday morning, V75 1S. V75 was buying, me, I was selling, with the hope that the natural move on V75 is sell. It will return. It will return. It was buying. I was adding more position, more sell position. I keep on adding. I went to church with the hope that it will sell. It will sell. And that very day, throughout that day, V75 kept on buying. It never sold. And inside the church, inside an AC on a Sunday morning, I was the only one sweating. In fact, if everybody observed me very well, they would know that something is wrong with this man. I was sweating until the account got blown. Pam. Then my head came back to normal. That I see, I have to approach this market carefully. I have to approach this market carefully. Like, you don't just go into the market and be careless with the market. You don't approach the market carelessly. Please let us have a change of mindset, and that's what this training is all about. You don't have to trade the way you've been trading. There should be something new dropping into you after this boot camp. And please, like, I'm begging you not to blow your own money, not even my own money. I'm begging you not to blow your own money. Please let us exercise patience. Forex is 80-90% waiting. It's a waiting game. It's a waiting game. Okay, look at the V751S I dropped this morning that sell. I saw the setup midnight. I marked it up, waiting for my confirmation to be met. Before my confirmation was met, I already slept off. I wake up, I saw that it was already selling. I had to wait for another entry point. Not that because I already have my setup is selling, I just woke up, then click sell without doing the right thing I'm supposed to do. I had to wait for another entry point until I got another confirmation to join the market. I did not join it. And immediately I called the sell. You two can see it. Immediately it was selling. Immediately we got into profit. Immediately. So that's how to do things. Don't be in a hurry. See, I tell you, if I like now for 3 days, if I don't feel like trading, I won't trade. Because for you to trade, you need to be in the right senses. Your everything in you needs to align with what you want to do. If I feel there's something may not aligning with trading today, I will just sit back and be chatting on my phone. I won't even trade for that day. Like I always tell you, it is not a must for me to take every trade. It is not a must for me to trade every day. So don't approach the forex market like somebody is mandating you that if you don't trade today, I'm going to kill you. No, you hold your money. If you like, leave it in your account for. So guys, let's end there and we are getting better. Let me hand over back to Francis to continue from here.
All right, you guys, help me to celebrate my mentor, help me to drop some fire emojis for him, help me to drop some fire emoji. Like anytime he's spilling words, like honestly, his words are basically a psychology to me. Like they are psychologists to my soul. They are always relieving. You know, when a mentor gives you a pathway, and then one thing you always want to do is that you always want to follow that way and not to miss out of it. Do you understand what I'm saying? Like literally, how would somebody be sweating under an AC? You can imagine how intense that environment will look like. So honestly, we will not work in that part. And then he has created a pathway for us that will really keep us in check. So with this being said, we appreciate you, sir, and then your work over us is really, really very, very noticeable, and then we appreciate it so much. So this morning, we are going to be completing the phase 1 of the bootcamp course. If you have been following us since the day 1, you would have noticed that what we have been stressing on is the market structure, basically. The phase 2 basically is going to usher us into entries majorly. The phase 2 is going to usher us into entries. I was really very bothered when somebody was sending a trade setup. It was already on the trade this morning. And I was surprised, like, well, let me see your setup and let me see your risk management. And then I was really shocked that he did not say anything. I just told him, brother, this is a sell market. And that's the same VIX 75-1X that my mentor was talking about. So I beseech you all, please don't get hurried to really, really trade this market. I've only showed you the peripheral or the little aspects. But right now, phase 2, we are going into the real work where you don't want to miss this opportunity. So today we are going to be talking about Fibonacci retracement and extension 2. Are we together? Fibonacci retracement and extension 2. And one thing that you must understand that market is not just designed like anyhow. Like the market is a construction of different variables that combines together to form one pattern that we all see visibly and we trade them. Are we together? So one thing that I would like to start out with is that there are some people that we call the market geometrists. Do you understand what I'm saying? Market geometrists are people that they use mathematics. They use mathematical problems to solve or to trade the market. Are we together? They call them the market geometrists. Let me write that here. We have the market geometrists. The market geometrists. And then these people, they use the mathematical formulas. Like, if I show you some of their chart markup, you will see that there will be different numbers in the market, because they believe that all these numbers at the right hand side are very, very important, that these numbers are very significant. And I hope you know that on a layman language, 0, 1, 2, 3, 4, 5, 6, 7, 8, 9, they are very significant numbers. They are the numbers that builds up 2 and 6. For example, if you want to get 2 and 6, is a combination of 20 and 6, right? So the market geometrists are people that believe that the market has a particular, number that the market reacts from. Just like, for example, when you see this aspect here, when you see this move here, the market geometrists believe that, the market reversed only because of the fact that a particular number of the market tapped out this number out, and then the market started reversing. And then in physics, there's what they call Fibonacci sequence, physics or mathematics. Do you understand what I'm saying? If you've heard of what they call Fibonacci sequence, I want you to drop a 1. If you've heard of what I call the Fibonacci sequence, if you're a physics student and you know what Fibonacci sequence is, I want you to drop a 1 on the chart. And then I think it has a formula. And then let me drop the Fibonacci sequence that we know 0. I'll be explaining it, and then we will see why this is very important in Forex. 0, okay, 1, 1, 2, and then we have 3, we have 5, we have 8, we have 13. I will explain this. We have 23, and then so on to infinity. We'll explain this. This is what we call the Fibonacci sequence. Let me see. Okay. All right. Now, how do we get these numbers? Do you understand what I'm saying? Now, these numbers was coined by Leonardo de Fibonacci de Pisa. I think I don't know, it's Greece or French or so like that. That's the person that formed Fibonacci. So how did he derive this Fibonacci number? I think he was trying to do an experiment on a rabbit. Like, for example, if a newborn rabbit is giving birth to in a particular, let's say in this month, and then at the end of this month, this rabbit would, increase in size. Do you understand what I'm saying? For example, this is July, and then a rabbit was given birth to, and then at the end of July, it is expected that subsequently this rabbit will be multiplying and will be multiplying. So there was an agreement in the construction of how this number will keep geometrical, that will keep being, that will keep being moving in a particular geometrical way. Are we together? So now, for example, let's imagine like, okay, this is the first geometrical number, 0, 1, and then how we got this 1 is that we had 0 plus 1 will give us 1. And then how we got this 2 is that 1 plus 1 will give us 2. How we got this 3 is that, okay, 1 plus 2 will give us 3. How we got this 5 is 2 plus 3 will give us 5. How we got this 8 is 3 plus 5 will give us 8, and then to infinity. So this is what we call the Fibonacci sequence. So the Fibonacci sequence. So the market geometrists believe that, and then this particular people, they believe that the markets move in a very, very significant way, so that the reactions of prices has a particular Fibonacci number that price react to, and then start making the move. But in Forex, basically, and in smart money, do you understand what I'm saying? There's a particular Fibonacci number, do you understand what I'm saying, that we are particular about. I taught you all market structure. I told you all that what we do is that we buy at the what? At a discount level. And smart money, do you understand what I'm saying, have a particular Fibonacci number that they play advantage of. Basically, in Forex, we have the various Fibonacci number. We have 0, we have 0.23, we have 0.38. If I do a particular mathematical, what are they calling it, calculation, I'll be able to derive the board. I don't want that for this class. So 3.38, we have the 0.383618. We have the 0.786, 786. We also have the 0.5. We have the 0.886. And lastly, 0.941. Good. So this is not only the numbers. We still have 1.13 as well. 1.13. These are all the different Fibonacci. Now, where do we get our Fibonacci numbers? I will show you how we can get them on this trading view and the likes like that. So, and so on and so forth. These are the various Fibonacci numbers that are very, very useful in the markets. But we don't use every of these numbers. But these numbers are very, very important. Do you understand what I'm saying? Particularly if you are a harmonic trader, of which I was an harmonic trader before. But right now, with my knowledge of smart money, I've been able to combine the knowledge of harmonic trading and smart money. Do you understand what I'm saying? But it's still the same knowledge. Smart money still has an overhead of this harmonic trading. But one thing that harmonic trading helps me to achieve is to help me to achieve confluence. And just imagine, for example, this is an higher high, higher low, higher high. You understand what I'm saying? And then this is forming something like this. You understand what I'm saying? Are we together? And then, according to harmonic trading, this looks like an opportunity to what? To buy. Do you understand what I'm saying? The last class I taught you that, for example, this leg was a reaction of the lower time frame, like the 1 hour. Do you understand what I'm saying? And this is also a liquidity point. But the information we are looking for to play is this higher high and then this higher low. Do you understand what I'm saying? So I don't want you to get confused. When we are talking about range, you will know what I mean by this. Where I'll be teaching you all what internal and external liquidity means. Why this is not an higher low. Why this is basically not an higher low. Why the higher low is at this point in place, this point here. So basically what harmonic trading helped me to achieve is that with the help of the harmonic Fibonacci numbers, I'm able to spot where the possible reaction is at this point in time. And also in market structure, wow, what is happening? What is happening now? Okay, sorry about that. Also in market structure, let me just use this information. In market structure, what we look forward to is we look at the discount price in an uptrend. Do you understand what I'm saying? So what harmonic trading will just help us to achieve is just to know those retracement points in the market. And then, like I said, the various harmonic numbers that we pay attention to is those 0, 0.382, 0.50, and the likes like that to infinity. So I'll be dividing the harmonic numbers into two, or the Fibonacci number, I mean, into two. We have the ones that smart money make use of, and they will have the ones that market geometries make use of. Market geometry. And look at this. So smart money, we are consigned. We take advantage of 0.50. One thing you keep in mind is that smart money always want to buy anything in the discount price, right? Good. So we always want to buy anything below the 50% during an uptrend. Anything below the 50%. I will show you on the chart where the market reversed 90% of itself, 50% and below. Now, another place the market can possibly reverse is the 0.618. Another place smart money look at is 0.786. Another place the smart money try to look at is 0.886. And sometimes, 0.914, so like that, or 0.94. Good. So, market geometries, you like playing the 0.382 majorly. And then sometimes 0.5, you like that. So in an uptrend, what we are looking forward to playing is that we want to play any points below the 50%. Now, let me take this out. Now, let's say this is the higher high, the higher low, higher high. Now, when the market is reversing back, where we want to see our retracement, our possible retracement, if I draw my fib, this is the fib. Are you seeing this? The Fibonacci. Can we see this? We draw our Fibonacci from the swing low. Are we seeing this? From the swing low, this swing low, the wick or the body. If you are picking the Fibonacci from the wick, you have to draw it to the end of the wick of the swing eye. Or if you are picking the body, you have to pick the body to the body of this body at the swing high. Should I explain again? All right, what I'm saying is that, for example, if this is a live chart, look at this, for example. If I'm actually picking my Fibonacci number from here, the swing low to this swing high, are we together? I must pick it from the body to the body or the wick. Are we seeing it? I must be very, very careful in making sure that it touches the body. Are we seeing that? And then what did you notice here? The reversal at this point is what? Below the what? Below the 50%. So imagine somebody that, like a market geometry, that feels like, oh, the market always reverses at the 382. Let me add my 382 because majorly I used to take I don't used to put all my fib together. Like I don't used to put all my fib because of what smart money make use of majorly. So look at this, everybody. So if I had my 382, look at, some people are thinking that, okay, this is it, 382 is looking like where they need to buy from because of this support, this particular support here. Oh, it's time to buy, it's time to buy. Look at this. Were they in drawdown? But personally, we are smart money traders. Why we get our, our entries from is always anything below the 50% for an uptrend. Are we together? Anything below the 50% in an uptrend. Smart money make use of anything below the 50%. Look at Big 75. My connection is off already. So we always like to buy anything below the 50%. Now look at this. If I draw my fib from the swing low, like I said in an uptrend, the swing low to the swing high, the market reversal that we are looking forward to is anywhere below the 50%. Seeing this, right? Anywhere below the 50% is our buy opportunity. Anywhere below the 50% is our buying opportunity. We're seeing this. Anywhere below the 50% is our what? Is our buying opportunity. Whether the 618, whether the 0.5, whether the 886. Do you understand what I'm saying? There's some, I told you that, we always want to look for the what? The discount price. And then the discount price might always come to give us that discount price at the 0.5, below the 0.5%. Sometimes price can come and give us that discount price below the 786. Sometimes price can come and give us the discount price around the 886. But one of the fib level that I always like to play is the 786 and the 886. The 786 and the 886. Do you all understand? So when it comes to the selling markets, when market is want to sell, look at this, for example. Let's do this. Look at this. Draw my fib from the swing low to the swing high. It is what? Where the market reversals, the 0.618. Now, look at this. The swing low to the swing high, where the market reverses from, 618. Look at this again. the swing low, the swing high, where the market reversed from, the 618. So smart money always want to buy at the discount price. Wow. We always want to buy at a discount price, that place where the price is giving us the lowest discounts that which we can always take advantage of. Let me go to the daily time frame on this trade. Now look at this. Look at this family. All right. Based on market structure, lower low, lower high, lower low, the market broke structure, right? I think market broke structure. Look at this, market broke structure, and then it gave us this. Now, if I draw my fib from here, if I draw my fib, this is my fib. Where did we get your fib from? You click on this side, and then you take your Fibonacci retracement tool. And then what I did was that I highlighted it, I made it yellow. I made it my favorite. I told you, like, if I click on this thing, look, I had it, but I don't use GAN fan. So I unclicked it, I will check it. So right now, if I bring my fib, bring out my fib low like this, the market broke structure. If I draw my fib, you look at where the discount price for this selling market is. You see where it is. I can pick it from this leg. Look at this family. Who can tell me where it's reversed from? Who can show me where it's reversed from? You can type it on the chat. Let me see whether you guys are following. Who can tell me where it's reversed from? Okay, let me see. Some person said 786. Some person said 886. But majorly, where the reversal came from this market is the 786. You've seen that, right? 786, 786, 786. All right. So now look at this now. After then, the market gave us another swing high, right? Higher low and the higher high. So what next are we seeing again? Now what are we going to do now? We're going to draw our fib again, right? We're going to draw a fib from the swing low. Again, the swing high. So where the market reversed from, this is the 886. So I haven't spotted these things on the higher time frame. And we identify our possible reversals based off the Fibonacci numbers. Mr. Wale was saying something. He was saying something. And what did he say? He said, his mentor, the person that trained him, told him that he has like 7 confirmations before he can enter the market. Basically, this is one of the confirmations of smart money. And then we call it confluence. Now, if my smart money play is actually in line with a particular Fibonacci number, and then what I'm seeing again is actually in line with the quota points. I know you guys will get to where I'll teach you about quota points in the market, because these numbers, they don't just exist like how they exist, like numbers. They have their existing, meanings. And the numbers are very, very significant. I used to tell myself, like, if you understand mathematics, if you love mathematics, honestly, you will know Forex. Like, when I was in school, like, I really love mathematics a lot. Like, I love maths, like, trust me. And that's one of the things that's why I like anything that has to do with calculations and the life like that. So now, quota theory is a particular mathematical understanding whereby we believe that, the market has different psychological moves. Do you understand what I'm saying? So if I see my confirmations aligning with the structure of the market in confluence with a particular Fibonacci number that smart money always play with, it will give me, a 50% confirmation for the trade setup. Are we together? It will give me another confirmation for the trade setup. So right now, that is for a buy market. And then I told you all that, during a sell market, one thing we always love to, see is the lower low and the lower highs. But something about the smart money is that smart money most times like to get a reversal from the 618. Do you understand what I'm saying? Because what we are looking for is the premium price. Because if you have a particular book, do you understand what I'm saying? And you bought it, let's say 500 naira. If you want to sell it, do you understand what I'm saying? Will you sell it 500 naira? Basically, no. You want to sell it higher, right? You want to sell it like, let's say 550. And then whether there is a reduction in price, no matter how it is, you cannot still sell it for that 500 back. So probably you want to sell it to another person. You look forward to selling it, let's say, even though everybody are no more selling it 550, at least you still want to gain profit, you still want to sell it at a premium price. But when you are hoping to buy something, you are hoping to buy at a discount. But when you are selling, you are hoping to sell at a premium price. So that's why, smart money, when it comes to selling opportunities, they look for selling opportunities anywhere below the 8618. Sorry, anywhere above the 618, I mean. Anywhere above the 618, 0.618 fib level. Never forget this, fam. Don't forget this. Like, I hope we are all jotting. If you're jotting or you are taking notes, even though you still have the recorded videos, let me see you drop some 2 on the chat. Like, if you are taking notes in this class, let me see you. If you're taking notes, drop some 1 on the chat. Let me see those people that are really students of the market. We've been taking notes. Okay. Okay. All right. So okay. That's good. Oh, just 3 out of 15, right? 3 out of 13. All right, let's get it. So like I said, the selling opportunities anywhere above the 600. So when I draw my feed from the swing high in a selling market to the swing low. You seeing this, right? You need to jot, honestly. Like, this is a school. It's not just something that you just think you want to just put in your brain and just think you can go. Honestly, like, you will not really make some sense out of it. So this is what it is. So now you see this, right? We look for selling opportunities around this point here. We look for selling opportunities around this point here. And that's where anywhere above the 618. I taught you all how to draw your fib. The first thing you want to do is that, okay, your fib, there's some particular, what are they calling it, thing you need to do to reset your fib. Look at the settings. Let me just do this. Look at the settings. The first thing you want to use is, okay, use one color for everything. I use my black. You see this, right? You can see my settings, my background. Sometimes I uncheck my background. If it first starts by, if you open a trading view and then you have not used trading view before, you see some very, very weird settings. So you can uncheck the background. You can uncheck, sometimes it brings percent. You can uncheck percent. Just click on the price, the levels. You can take a screenshot of how it might look like. Take a screenshot. Take a screenshot of my settings. You can take a screenshot of my settings. If you've done that, let me see you drop some 5 on the chat if you've done that. This is the settings of mine. So in case if I need, a particular number, I always try to, I can do something like this and then just fix it in. Or majorly, I don't need this. Okay. I don't need it. So these are one of the things I need. Seeing this, right? So let me see. All right. So let's go. So like I said, during a selling market, we draw our fib from the swing high the swing low. Now look at this. When market give us another break of structure, let me see. Seeing this, right? You see where the market reversed from. And don't forget, we draw it from the wick to the wick or the body to the body. Don't forget that. If you are drawing your fib, if you start out from the body, make sure you end at the body. You understand what I'm saying? If you are drawing from the wick, make sure you end at the wick. Are you getting what I'm saying? Okay, somebody said I should draw again. All right. Okay. Now look at this. Let me take this away. Just follow me. Now look at this. This is for a selling market, right? Now, where do we draw our fib from? Where did I draw a fib from? I take my fib from my tools. We draw it from this swing eye, then I bring it down. Seeing this, right? Anywhere above the 618, anywhere above the 618, anywhere above the 618, anywhere above the 618. Seeing this, right? Anywhere above the 618. Now look at this again. Wow. You seen this, right? So now, no, for this class, it's just Fibonacci numbers, just to identify the Fibonacci numbers. The other confluence, those ones are what we'll be looking forward to in other classes. That will be, in the phase 2. Just identify where you look at your reversal. So that, for example, particularly if you are trading, and then you see some people in a particular boot camp, or sorry, in a particular, what are they calling it? Some channels, and they called a buy setup for you. Wow. Why is my mouse just frustrating me like this? For example, they call a particular setup for you, and then you are seeing something like, oh, the market is doing something like this. Oh, it has started selling. And then personally, within yourself that it has not reached this particular place that the market needs to sell. And you start selling with them. Oh, it has started selling, it has started selling. It has started selling, it has started selling. And then you join them. And you're like, but this thing, it's already time now. It's already time. I don't know. You get what I'm saying? So I don't want a situation that whereby you be in a trade and you send some setup with you, sorry, please, I'm already losing. What can you do to me? Sorry, I might not be able to answer that, or even my mentor like that. There were some particular people in which one particular guy, I don't know, he was losing $10,000. And it's every time he's losing, he will always come to the chat to ask for help. Do you understand what I'm saying? And I told him particularly, like, was he going to join the boot camp? He said he was going to join. And right now, I'm not seeing him. So this is where the incubation is. This is where the process is. And this is where, babies are turned into giants. And trust me, you all are in this boot camp. You never can tell how so massive it will all be after this course exercise. Just trust the process, like I used to say, and then just remain focused. So particularly, this is how the market moves now. Now, for example, when you are seeing something like this, and then the market does not get to that place where we want to see the possible reaction, like what my mentor said, we do more of waiting. We do more of waiting. We do more of waiting. So we wait. That's why most times you see me play music. What I do is I play music. I have my motivations. I have my stuff. And I get to just enjoy myself. And when my setup is almost at that point, I sit down on my laptop and watch price do some reactions. I take my trade. I leave my chart. That's how it is. That's the Forex lifestyle. So it's very, very simple. Trust me, if you learn patience in Forex, honestly, other areas of your life, you will really learn patience. You will really learn what patience means. Because, for example, I haven't lost money for a whole lot of time. You understand what I'm saying? And then one thing you want to restore back is that you want to restore your psychology of being disciplined. It will take time. Honestly, after you've gained this, honestly, there are some things in your life you will not just be hurrying about. It will take your discipline. It will take your patience. If you agree with me, drop some 5 on the chart. If you agree with me, drop some 5 on the chart. That the discipline you gain from Forex would actually, circulate in other areas of your life, that you really learn how to really tackle and really solve problems. Honestly, like, I really see Forex as a problem solving, not just about the money. Honestly, like, if you're thinking the way professional traders think, you will think not like, because it's not like you're trying to see the reactions of others, and then you are playing the opposite. When everybody are impatient, you are patient. When everybody is trying to gain the market in a very rushing way, you are very, very patient. So right now, this is everything. Okay, all right, I'm done with the Fibonacci retracement tool. The extension tool, I don't think we really need that for the smart money, because smart money use this basic Fibonacci number, the 0.5, the 0.618, and the likes like that. We use it for our sniper entries. But if you are an harmonic trader, like, I have been an harmonic trader, and then I still have knowledge of harmonic trading, we make use of some extension tools, like 1.13. I will show that. I'll show us on the chart. 1.618, and like that. Let me show you. For example, there's sometimes in which price will come like this, then break structure like this, and still come back like this. There's a particular book that I read that really gave me knowledge of this harmonic trading. It is like, I think the combination of the 3 of this book is like 1,002 pages. I read it for a very short period of time because I'm hungry for this knowledge. Like, I'm hungry for this knowledge. Like, honestly, like, so sometimes when the price gives us, okay, higher low, bro, please, someone should help me attend to this, man. Like, I disabled, what are they calling it, waiting list. So I don't understand what he's saying now. No, thank you. So sometimes price will come like this, break structure, then we catch this retracement here. So with my knowledge of smart money, sometimes when the price, harmonic trading, price will just come like this, reverse something like this. So now look at this, for example. Look at this, for example. Why we use what are they calling it? Extension tool. Smart money and what I call harmonic trading. Smart money is seeing a particular institutional candle around this point here, or what I call an imbalance or a mitigation. And then the extension tool, I mean that something that extends more than one. Do you understand what I'm saying? Extension tools are extend more than one, like the 1.13. Now you can see this on the feed. All right, let me show you in the settings. Look at this. What's happening right now? Okay. Extension tools, like, look at this, family. See this, the 1.13, the 2, the 4, and the likes, 2.618, 1.61618, and the likes. If you want to read about the harmonic trading 1 to 3, you can send me a DM. I'll send you the book. It's 1,002 pages. That's, I think, the volume 1 is like 300 page, volume 2 400, and the volume 3 300 page. So like that. So if you love reading, it's fine. So basically, so what I use the fib for is for confirmation. Now look at this trend now. Look at the trend of this market. Why I can really basically just understand the move of all the markets, but I wait for the market to come to those points. I don't chase the market. This is the right. This is basically higher high, higher low, higher high, higher, and the break of structure, right? And then we know that after a break of structure, the price will still come and do what I call the retracement, right? I'm talking about this retracement here, this bullish retracement with our high and focus that the market has broken structure. You know, if you don't have the knowledge of catching this retracement, it's better you wait for the sell. Is that true? It's better you wait for the sell. Well, you know, you are in our family, don't worry, we'll all be catching everything little by little. So this is an extension to the market extended to this point here. Well, you know, it's not a problem, honestly. Like, it's really not a problem. Do you understand what I'm saying? Now, let me take this off. Let me take this extension to off. Well, basically, I taught you smart market structure, right? And then another market structure, if you look at this is higher low, higher high, the break of structure, right? Then when I see this break of structure, probably, you know, when the price was coming around here, let me delete this. Let me delete this. Sorry, at the first instance, price was doing something like this, and then we're expecting what are they calling it? We're expecting price to, you know, give us our mitigation around the point. The price extended like this. You understand what I'm saying? We can actually catch this extension based off the information that prints in this point. Maybe, like I said before, our order block can be here, our institutional candle can be at this left-hand side. You understand what I'm saying? And then those are the things that we look at. Yeah, in phase 2. It's in phase 2 that we understand all these things. So look at it in volatility zone 5 family. Let me go to the daily time frame and show us what I'm saying, so that we all understand. All right, so let me clear my screen. I think I did some markup. I wanted to do some market overview, but maybe after the class, let's see how it goes. So when I draw my fib, do you understand what I'm saying? Based on my knowledge on harmonic trading, I draw my fib from year to year, from the swing low to the swing high, to see the possible reversal. And then one of the things I told you all was that you know, price was still going to break down. Well, like I was telling Mr. Wale, like one of the reasons why I was not confident about this buy was because I did not see a break of structure on this 4 hours time frame that broke above this point here. You understand what I'm saying? You have seen that of this buy. But I still see the markets, you know, coming to the 886 around these points here. Why? Because of the fact that it's forming an harmonic pattern. Like if you see this higher high, higher low, higher low. But basically that is just like a weekly or a monthly trend. Or in the daily, we can always do this higher low, higher high, higher low, higher low, higher low, higher high, higher low, higher high. The market broke structure. You see this broke structure and then coming down again, and then like this. So it's still the same thing. It's still the same knowledge. It's still the same understanding. It's just that we use Fibonacci numbers for confluence. Do you understand what I'm saying? We use Fibonacci numbers for confluence. It's just to help us. Look at this. Look at this family. Now, when I saw, just like for example, all right, market give up, okay, higher high. You know, some people would have thought that this is, you know, I taught you that we always see break of structure by candle, so that you're not gonna look like, ah, wow, thank God, oh, this thing is already retracing back. It's time to, you know, catch our higher low around this point here. I hope you are getting what I'm saying. But look at here, the market give us an higher high. Did he give us an higher high around this point here? Let me see what you guys are saying on the chat. Did the market give us an higher high? Hope you know, look at what I'm saying. Higher low, lower low, and break of structure, right? And the market gave us this. The market gave us a break of structure. No. Why? Because of the fact that we did not see anything, a candle that closed below this previous candle, right? Good. So what these numbers help us to do is just to help us to be very, very careful. Do we see that? So the only time we got the break of structure was this point here. And then if I'm playing my range from here to these points. And then that's why market cleared everybody out, even cleared this candle out. If you notice, it cleared it out. See, he cleared. Did he clear it out? Yes or no? He cleared it out and he came to mitigate from this point here. Started reversing. So now if I drop, let me draw my fib now. Let me draw my fib because this was the next swing guy. And this was the previous swing low. Do we agree? Right? I'm using daily time frame of this volatility 75. Daily time frame. Look at this. I draw my swing fib. We'll see where market reverse from. Sorry. So look at this. Who can tell me where it reversed from? It reversed from this what? So what did it reverse from? Let me see. Let me see what you all are saying. Where did it reverse from? I'm not seeing us typing on this chart. 886 from the 886. So we're seeing that now. I spotted the fact that okay, from this point, this was the swing guy, being the higher high. At this point here, market has not broken structure to the upside. Only where it broke structure where it was this point. Right? We're seeing that. So that is what we are conscious of. We're conscious of these things. Are we together now? Now, if you keep it in mind that, you know, I'm trying to blow you out your mind, and see this now. Market has not broken structure. So potentially in your mind, all these points here, there will be liquidity points. All these points here. Since the market has not broken structure, all these points, they are liquidity points. They are liquidity points. They are liquidity points. Look at this equal low. Look at what smart money came to do. Now, okay, so let me move to that topic now. So let me move there now. So let me move there. So, like I said, I want somebody to type on the chart what are the Fibonacci numbers that smart money plays during an uptrend. What are the smart money Fibonacci numbers that we always take advantage of in the in the market? What are the smart money numbers a market can, most times loves to mitigate from? Let somebody type on the chart below the 50%, below the 50%, below the 50%. So that is very, very accurate. And then what during a selling opportunity, what is the smart money Fibonacci number that we take advantage of? Okay, yeah, that is good. Above the 618, very, very correct. Above the 618, above the 618 for a selling trend. But when it's a buying market, below the 0.5%. So with this being said, it's a very, very clear and a very, very straightforward class. Something that you need to put in mind that when it's a selling opportunity, you want to know the smart money number, Fibonacci numbers, and you want to keep in mind. But the extension to is not for it's something that okay we can always keep in mind because you can always keep in mind of the various extension to. You understand what I'm saying? But majorly we are more concerned with what smart money is because we are smart money traders. You understand what I'm saying? So we cannot lose. What I mean that we cannot lose that we have a winning mindset. We have a winning mindset. So I will end my section by giving us this affirmation that one thing that you must do always as a trader is that always remind yourself of the need of being profitable. And profitability comes with trying to understand yourself and trying to manage yourself and controlling your emotions. And how do you control your emotions? when you have a good trading strategy, and then you have a good risk management. And lastly, following your trade plan. I remain my humble self, Francis Success. Thank you all. And I appreciate you, family. Appreciate you, family. Thank you for watching. And right, thank you. So I will be unmuting some persons before I give it to my mentor to just drop some values and some gems as he has been doing to us. So let me unmute full. Let me unmute full. Okay. All right. So you can ask your question full.
Good morning, everyone.
Yeah, good morning.
Okay. I have two questions. The first one will be, when or how do you see that you need to use the Fibonacci so that it can give you an indication of an entry? That's question number one. And number two, when and how do you see that the Fibonacci is not playing out on that particular trade?
Okay, thank you so much. Very, very important question. Did you join us when we started the class?
Yes, I did.
Okay. The first thing I did was I draw the scenario of an uptrend. Like this is how an uptrend looks like, right? Good. So why do we draw a fib? We draw a fib when we see price coming down. We draw a fib to indicate the reaction of the price during a swing low. Do we all understand? Like, see this? When I see that, okay, the price is already coming down to give us the discount price, I draw my fib. I draw my fib. And then I see this as a confluence. For example, if my possible mitigation point is in line with smart money Fibonacci numbers, sequence numbers, it gives me confirmation. Let me unmute you again so that I will be very sure if you are getting what I'm saying. I get what I'm saying. So basically, I've answered the both questions. The first question is that we check the trend of the market will determine the Fibonacci numbers that we are trying to take advantage of. The trend of the market. You following me, right? Do you understand?
Yes.
Very well?
Yes.
Yeah. So let me see. Sir, please, you said you are teaching with daily time frame. Please, does it mean we are going to wait for days? Oh, Jennifer, like, I've not taught us on smaller time frame entry. Are you with me? I've not taught us. If you check your, what are they calling it? Your bootcamp course, smaller entries. For example, I can see, were you there when I was teaching on market structure? The aspect of the daily for a direction, 4 hours for structure, 1 hour for refining, and then entry. Where I told us that, for example, if we catch a daily time frame analysis, where we can get our entry is from the 5 minutes, the 15 minutes, and the 1 hour. Were you in the class? If you were not in the class, I advise you to go watch the videos. Watch the videos so that you know what we are really doing here. So that is how it looks like. I get my daily entry. I go to my smaller time frame for my, please, you need to watch the video again so that you really understand what we're doing. Thank you so much. So what we do basically is that we check for the daily direction and we go to the smaller time frame to check our entry. Because honestly, I can't take my entry from here. Look at this. Imagine, I can't take my entry from here. I'll be risking a whole lot. I'll be risking like $100. Look at this now. You should see this. This candle. Or now this, for example, if this is my entry point, so look at it, imagine, and this was where my entry is. Well, this is smart money entry. And when this is 378 and this is 337, I can't risk like $47 now on this trade. So if I go to the smaller time frame from the 4 hours to the 1 hour to the 30 minutes, I will show you where my entry is from, where I'll get my SL of like $5, $7, $8, $3, depending on how the market presents the information to give us a little risk reward ratio. So do you understand, Jennifer? Do you understand, Jennifer? All right. Did you understand? I want to know if you understand, Jennifer. Okay, all right. Thank you so much. Thank you so much. I really appreciate fam. So with this being said, I'll call it my day on this topic. So we'll be starting with phase 2 tonight on trading psychology, risk management. And to teach us again is my mentor. Honestly, you all need to be plugged in. Honestly, like I need you all not to miss this class, like because I told you that most of the things that I listen to that get into my brain is psychology. I listen to more of psychology than I try to watch, a particular strategy, because it's now if my winning streak gets into my brain, you understand what I'm saying? To make me to want to feel like, oh, I'm the boss. But when my psychology is put in place, honestly, like I will always be at a very, very good stage. So let me give it to Excel before my mentor will come in. I think Excel wants to really ask a particular question. All right, I've promoted you, Excel.
All right, thank you, sir.
Yeah, thank God.
Yeah, I quite understand that we expect above 50% when we are in an uptrend, and also the below 6.18.
What I'm saying is that no, you are mixing it. Below the 50% in an uptrend, above the 618 in a downtrend.
Exactly.
Yeah.
At times during these trends, there are sometimes it doesn't reach up to this power. What I
don't
that
take those trades.
Okay.
I don't take them, honestly. Like sometimes
it's not a high
it's not a trade. Yeah, exactly. Yeah. Let me show you example. Okay, I think it's a daily time frame, right? Okay. No, I can't even see one on the daily. Most of these times, most of this stuff you are talking about, you see them on the lower time frame. Now look at this one, for example. Let me annotate this place. I'll take you all to the 4 hours and see what information this is like. Obviously, this did not reach the 50% anything. But look at what happened later on. You can see what I'm trying to say, right? Okay, let's go there and see what is happening there. I just pray the data will be able to present itself. I just pray. Okay, I think is it? Okay, look at this. Wow. Okay. Wow, is that it? Now, imagine this is our swing low. Look at this. Swing low and a swing high. Now look at this. Fine, price did not break structure, right? Good. But you can see what reaction it's display here. It started falling. Some people that think that, oh, it's time to, this is a support, or this is a support. And then it's time to really buy. Do you understand what the price keep on doing? So basically what I'm saying is that if my the retracement of that particular number or that particular pair did not retrace to my smart money point of interest or my smart money Fibonacci numbers, I don't take those trades. Look at this again. Look at this. This is obvious, very obvious. Now, answer for yourself. Did this reach the 618? Oh, sorry, did it reach anything below the 50%? Yes or no? Did it reach below the 50%? Did it reach below the 50%? Now, I wanted to say it like obvious, like say it below the 50%, like below this. This is the 50%. Like I'm talking about this one. So let me see your answer. This is a higher high. I've seen this, right? Higher high, then higher low. Good. So did the higher low? No, now it did not reach below the 50%. Can't we see this red 50%? Like this 50%, this is, did it reach below it? What we mean by below is that it must come below this one. Sorry, below the 50%. Like Oh my God. Coming up. Like below it, like not just tapping it, below it. Obviously, it did not. So when price went up, we're expecting that this will be our next swing low. Abi? That means we'll draw a fib again. Some people would have, oh, that's giving us the higher high. Look at this again. We'll now take their fib again. Oh, it's time to buy. Did he give us an higher low? No, market broke structure. So we all understand, right? Good. So that's how it looks like. Oh, okay. You said I was looking at the other end. Sorry, you need to watch the video again. Is how do I get these measurements? You need to watch the video after this class because I've really been starting out since 10 o'clock and I'm explaining this. So that's why I always advise, let's join the class early. Let's join the class early. Let's join the class early. So thank you, family. I'll be giving it to my mentor to, to drop some values and some gems. So did you understand everything that I've said about your question?
Yes, I did.
All right, thank you so much. I appreciate it, fam. All right, so
yeah, job well done, Francis. You've actually done justice to everything. And for those asking about Fibonacci, Fibonacci is a tool on TradingView, is a tool on your MetaTrader. Even if you are using an Android phone, Fibonacci is a tool on your MetaTrader. Even if it is MetaTrader 4.5, you have it there, and that's where